Morning students, welcome back to this discussion on audit. So in the previous sessions, we have discussed significantly around the assertions, and we have also looked at some of the items, and particularly in the previous session, the item that we covered in relation to the financial statement, that was borrowing. And we talked about it, that it's considered to be a very significant component of the balance sheet. Quite important for any type of entity as far as their financial statements are concerned, and therefore their audit is concerned. At the same time, it is also something which requires significant audit procedures, considering the significant risk which is involved in that type, right? And we also talked about a specific category of procedures which is required to be considered in respect of borrowings, like accounting check will be doing for any other item. Compliances check, okay, all of these things will do for any other item. But when it comes to the borrowings, so there was one external check which was about the direct confirmations, which becomes extremely important procedure in relation to that line. Yeah. And we also tried to understand some of the assertions which could be linked in a way to the various audit procedures that we capture as far as the borrowings are concerned again. Yeah. So today, what we will do is we'll pick up one example, okay, just to get a sort of, revision in terms of this borrowing aspect and some of the things that we have covered. And then we'll move on to the other line items also. Yeah. So we'll continue our discussion in the same manner. Okay, so let's move on to this example. Yeah, so if you look at this example, question number 2, yeah, a company has availed cash credit facility. Cash credit facility, you can say, is a kind of borrowing of 2 crore. Outstanding balance rupees 2 crore as at the year end from a bank for meeting its working capital requirements against security of stocks and debtors, and that is guaranteed by the debtors of the company. Okay, so now in this case, there is a borrowing. What is the nature of the borrowing? Cash credit facility. You can just simply say it's the nature. Okay, like you have term loan, you have overdraft. Similarly, you have cash credit facility. But this is secured. What do you mean by secured? Secured means against this borrowing, certain assets of the companies, of this particular company have been mortgaged. What are those assets? Inventory of the company, receivables of the company, receivables in respect of debtors we are talking about. Okay. And generally, when you obtain a loan from the bank, which is towards meeting some of these working capital requirements, okay, so therein the mortgage also happens to be in the nature of the assets which are like inventory or debtors. Okay. Further, over and above this mortgage, over and above this security which is provided to the banker, a guarantee is also given. Okay, so it's like the directors of the company have given a guarantee. Guarantee, you all understand? Yeah, so guarantee means if, let's suppose, company fails to make the payment, then the directors take the guarantee. So therein, directors will be held liable for such payment. Okay, so that's the nature of the guarantee. Fine. So it appears to be quite secured in nature. So generally, when the loan is secured, that is considered to be relatively safer. Yeah, because if you look at it from the lender's perspective, lender is in a position to get the money back. If, let's suppose, company defaults, so lender has got some assets, inventory, debtors, these assets are available with the lender, through which the money can be recovered by the lender. So that's a sort of security which is available. And if, let's suppose, One may say that the value of inventory and debtors is not good enough. That is again possible. Yes or no? That the value of these assets is not good enough, because there could be some points of time wherein the value of these assets may go down, though the bank will generally take care that the value of these assets do not go down. But what if it goes down? So therein there is an additional security in the form of guarantee. Okay, so this guarantee is available. So if the value will be lower, then the shortfall, let's suppose the value of the asset happens to be 1.5 crore, 50 lakhs is the shortage. Okay, so that is the amount which the directors will be required to pay. Okay, so this is the understanding of the nature of borrowing. Clear? Now, in regard to this cash credit facility, now the question is, how should this cash credit facility be classified and disclosed in the financial statements of the company? So that's the first question. Okay, but please understand that as far as this question is concerned, it appears to be more of accounting. Yes or no? Because if you are asked, how will you classify that? How will you disclose that? It's more of an accounting requirement. Okay. On the top of it, one more question which you need to deal with is that in relation to this cash credit facility, what are the audit procedures you will plan to perform? Okay. So if let's suppose you were to perform audit procedures on this, so as an auditor, what are the audit procedures you will perform? Understood? Yeah. So I've got two questions for you. Over to you. Yes, quickly. What are the audit procedures you will consider? Over to you. So what I'll do is I'll just open one working file wherein I'll just put down the audit procedures which you will specify. Okay. Yeah. So over to you. Now, you need to tell me what all audit procedures you will consider. Of course, classification and disclosure requirements, you can let me know. But along with that, you also need to let me know what are going to be the audit procedures. Prem is asking about willful defaulter and the Prem. I'll come to that point. I'm not sure where are you picking this from. Currently, let's focus on the query and let's discuss this. Then I'll come back to your point. Fine. Quickly. So, what do you think could be the audit procedures? Over to you. In relation to this, what all audit procedures you will consider? Very good. Rihanna says cash credit should be presented and disclosed in the balance sheet on the liability side. Okay, fine. Under the head, short-term liability, because it's a cash credit. Fine. Okay, so I think Prem is still stuck on that. Prem, please focus on this right now. I'll come back to that point. Yeah. Quickly, anyone else? So, what are going to be the audit procedures? And it will be good if you can just add the assertions along with the audit procedures. Okay, yeah. So currently we are talking about cash credit facility, which is secured in nature. Quickly, any audit procedure that comes to your mind, please think about it. Yes, quickly. So let me just help you on this. Now, because it's a very good, so Rihanna says we will verify the bank statements. Yeah. So as regards the borrowings, what are the things you will check? Accounting you will check. How is that recorded by the company you will check? So if there is a borrowing, so the company would have received something. Yes or no? Company would have received the sanction. Company would have entered into an agreement. So there must be some sanction letter agreement in respect of this borrowing. Yeah. Rohan says cash ledger will check. So I think you're talking about the ledger, means the books of accounts. Sunil says borrowing certificate. I think here again you are talking about the documentation which is done in respect of borrowing with the bank. Correct? Almaz says external confirmation. Yes, very good. So now some of the procedures you have mentioned. Priyanshi says test of details and transactions. No, but when you say test of details and transactions to check completeness by comparing the bank balances with the books of accounts. So in a way, you are talking about verification of the bank statements. Yes or no? Yeah, so some of the procedures you are saying are verification of bank statements, tracing the balances to the books of accounts. Correct? Then next, documentation verification. Yeah, which is what? Sanction letter. Correct? Agreement. Yes. Then another very, very important procedure. Very good. Tanu mentioned which property is mortgaged. So if there is a security, so this would have been specified. Yes or no? In the agreement itself. Yeah, so you'll also find out in terms of the valuation as to which all properties are there, which all assets are there, which have been mortgaged, how are they appearing in the books of accounts? Does the company have got those has got those assets in the books of accounts or not? Correct. Next will be the confirmation procedure. Again, very very important. Priyanshi says assertion can be proper disclosure and valuation. Yes. See, the assertions have to be all. Why? Because it's a balance sheet item. So if there's a balance sheet item, then of course you'll cover all the assertions. But the point is that for every procedure, you need to map the assertion and then let me know. So that's how you need to approach this, because that is what you'll also be required to do in the exam. Okay. Now, as regards the confirmation procedure, so that direct confirmation, so that detailed procedure you'll have to perform. Direct confirmation by the auditor means communication to the bank in respect of the balance which is outstanding as at the year end. And then, of course, if there are any differences, reconciliations. Okay, reconciliation for differences, if any. Correct. Then, of course, there are a lot of other procedures which can be attached to that, which is in respect of some of the sample checking of the bank statements. How is this recorded in the books of accounts? Which is also about the presentation requirements, means whether this has been presented appropriately or not. That again, you'll look at the financial statements, you'll review the financial statements to check whether this has been presented in an appropriate manner or not. So, how do you present it? Okay, and what all disclosure requirements are there, whether the company has taken care of both of them or not. Yeah, so presentation and disclosure requirements you'll look at. Okay, wherein you will go to schedule 3 division A. Yes or no? Yeah, correct. Yeah, so these are some of the procedures which generally you will find in case of borrowing. Yeah, of course, that becomes relevant in the context of this borrowing also, because this borrowing is no different from any other borrowing. Correct? Clear? Yeah. All right. So now let's also try to understand as to what will be the presentation and disclosure requirements in this case. As we discussed, when we are talking about presentation and disclosure requirements, what is that? It's more of accounting answer. So in a way, you can say it becomes relatively simpler for you to answer this. Yes or no? Now, we understand it's a kind of borrowing. So therefore, where will you present this? In borrowings. And because this is a loan for meeting working capital requirements, so generally you will find this to be short term in nature. Okay, these are generally, that's the nature of these types of loans. And for these borrowings, because these are secured, so that's why you'll have to again give the appropriate disclosures as regards the securities which are there. Fine. Now, above said outstanding amount shall be further subclassified under the heading loans repayable on demand from the banks. So there is a main head of borrowings wherein there could be various short-term secured borrowings, and under various short-term secured borrowings you have one of these loans. A company may have another loan. Yeah. So this is a loan repayable on demand from the banks. Okay. Now, if you look at the requirements of Schedule 3, it says where the loans have been guaranteed by the directors or anyone else. Aggregate amount of such loans under each head should be disclosed. Okay, so that's a disclosure requirement which you need to now follow. Okay, clear on this, everyone? Yeah, everyone clear on this? Yeah. Then I think I had one query from Prem. Let me just go back to his query. So that's on page 5.35. Just a minute. So 5.35. Okay, so I think I'm on this page. Now, Prem, what is your query? So he's asking, can you please explain? Okay, so the query is, can you please explain willful defaulter and fourth point? So let me just try to get onto this. Okay, willful defaulter and fourth point. All right, so let's go through this point. Yeah, just a minute, I can see. Okay, so willful defaulter, where a company is a declared willful defaulter by a bank or financial institution or any lender. Following details shall be given. So some disclosure requirements get attached. Now the question is, how do you define a willful defaulter? So it means a person or an issuer who is or which is categorized as a willful defaulter by a bank or a consortium. Consortium means if let's suppose 3-4 lenders are there. Instead of one bank, the money is taken from various banks. Okay. Now, what is a willful defaulter? So there are some guidelines of RBI which keep changing. Yeah, which keep changing. Now, if the bank has declared any party as a willful defaulter, means it's a defaulter wherein the intent to pay. Okay, so in general terms, you can say, again, we are not getting to that technical definition, not really required, wherein the intent to pay is not seen from that party. So the bank considers that as willful defaulter. Now, the moment that is the case, so some disclosure requirements will get attached because bank will then give this declaration. Okay, date of declaration when that has been declared as a willful defaulter, and details of defaults, amount and nature of defaults. Okay, of course, default will be there. Default means default in terms of repayment. Fine. Now, next point is around utilization of borrowed funds and security premium. Okay, so now where a company has advanced or loaned or invested funds, either borrowed funds or security premium or any other sources or kind of funds to any person, entity, including foreign entity, with the understanding that the intermediary shall directly or indirectly lend or invest in other persons or entities identified in any manner whatsoever or by or on behalf of the company, or provide any guarantee, security, or the like to or on behalf of ultimate beneficiaries, the company shall disclose the following: date and amount of fund advanced or loaned or invested in intermediaries with. So let's suppose company has given a loan, okay, and it's sort of routed through a third party. So let's suppose company is A given to B. So who is the beneficiary? B, and it's routed through C. C is the intermediary. Okay. So in this case, what are the disclosure requirements? Date, amount of fund given. Okay. date, amount of fund further advanced by such intermediaries to other intermediaries or ultimate beneficiary. Let's suppose C has given to B, or let's suppose C has given to B as well as D. Multiple parties could be there. Date and amount of guarantee security, if there is any. Generally, it will be there. Declaration that the provisions, okay, now the relevant provisions, whatever is that provision, whether this is FEMA, Companies Act, whether all of those provisions have been taken care of. Okay, so whatever laws and regulations which are attached to that transaction, whether that has been complied by the company or not. So this is a disclosure which the company is required to. Okay, now please understand that this is an accounting answer. Okay, this is something which is a disclosure requirement, which the companies are supposed to do in respect of such type of arrangements. Similarly, if the company has received any fund, okay, there again, there are some disclosure requirements. So if you move on to this part B, so part B is on the receiving side. But here again, it talks about the disclosure requirements, that in such a case, what are the disclosure requirements? So it's all about giving specific transactions in terms of what all disclosure requirements are attached to that. Okay, clear? So I'm just hoping, Prem, you're clear on this. Anyone else? Any more questions? No? Any questions? Any more doubts? Okay, so Prem is clear. Any more questions? Any more doubts if you have? No? Sure? All right, so then we'll move further. Okay, so now we will pick up another line item of the financial statements, and that is trade receivables. Okay, now borrowings we discussed was quite important as far as financial statements are concerned. Plus, if you look at it from the perspective of audit, that is considered to be quite important. Similarly, if you look at this line item trade receivables, this line item again from the perspective of financial statements means as far as the financial statements are concerned, it is considered to be quite important. Okay, so I'm talking about trade receivables. So it is considered to be quite important. And why is this quite important? Let's try to understand that. And in fact, before I get on to this trade receivables as to why it is important, can you give me some insights as to whether you believe this trade receivable is an important item or not? And if at all, why do you think it could be a risk area for any company? Hope you all understand about the risks which are involved in the respect of audit. Yeah, so any thoughts from your side as far as audit of trade receivables is concerned? Any sort of risk you believe could be there in respect of trade receivables, because of which you may be considering this to be a risky item, and because of which you believe that the audit procedures in respect of trade receivables are going to be slightly more stringent as compared to any other item. Great, I can see a lot of responses coming up. Okay, Prem is saying yes, there is a risk that the debtors may not be actual. Means transaction has not actually occurred. Okay, so I think the question mark could be on the existence. Okay, it's a big risk. Rohan says it's important. Why? Because there is a cycle, or you can say there is a process of sales. Yeah. Now, to sales, trade receivables get linked. in a way. Yes or no? So trade receivables are linked to sales. And sales, as far as any audit of any entity is concerned, it's considered to be a significant risk area. Yes or no? Significant risk area means by default, it is presumed that sales is a significant risk because the nature of sales is such. Yeah. So that is what you also need to consider in that. Okay. Great. So Rohan is saying it's related to sales. Yes, correct. Prem is then saying there is another risk that debtors are there. Sales have also taken place. Okay. So as far as transactions are concerned, they are good. But maybe the debtor is now unable to make the payment either partly or fully. So that means the receivable which is there may not be fully recoverable. So what do you do in such a case? If the receivable is not fully recoverable, what do you do? How do you recover that money? So that becomes a challenge for the company. Yes or no? Rihanna says it tells about debtors' payment to be made. There might be bad debts made and provision for doubtful debts. So the risk is present. Yes, again, a very valid point. Tanu says there's a risk of non-payment. Yes, of course. We talked about it. Priyanshi says it's quite important. Why? Because it shows the liquidity of the company. And it is risky because it can cause bad debts, which can affect the reliability and also whether the debtors are real or not, the sales have actually happened or the sales are, oh sorry, and accordingly the receivables are actually there or not. Correct. Then I think I can see one query coming from Nidhi. Okay, she is asking whether this audit is a theory or a practical subject. In fact, I would leave it up to you. In fact, what do you think? In fact, I would request you to answer this. What do you think? Is it theory or practical? I think it will be great to understand your thought process. Huh? Yeah. Okay. So of course we can then discuss, elaborate this, but of course let's not deviate from the topic right now. Okay. So now good points you have added in relation to the trade receivables. So now what is a trade receivable? It's a debtor. So if let's suppose there's a company which has got sales, say for rupees 500 crore during the year. Okay. Now, in respect of these sales, let's suppose rupees 450 crore have been received by the company. Yes or no? During the year. So we are talking about a cutoff. And rupees 50 crore is outstanding. So we are not saying it's not recoverable. We are saying it's outstanding. Correct? Now, this situation will exist at every point of time during the year. Yes or no? So currently, the position that we are looking at of this balance, this is as at 31st March 2025. But it will not remain same at every point of time. Every day, this balance will keep changing. Why? Because every time a credit sale will be made, this balance will increase. And every time a collection is made, this balance will go down. Correct? So this balance will keep changing throughout the year. So that is something we need to understand, that this balance is not going to be constant at every point of time. Okay. But one thing is for sure, that this balance is arising as a result of sales. Okay. So there's a process in a way. And what process is that? This process is in relation to the sales. Through sales, we have these trade receivables which get generated. Yes or no? Yeah. So how do you get these trade receivables? Through sales. Yeah. All right. So then I think Priyanshi has a point. Sure, of course. We'll talk about this practical theory maybe slightly later. Now, this trade receivable is what? It's an asset for the company. Now, when it comes to any asset, now currently I'm not trying to link this to sales completely. Why? Because otherwise our focus will completely shift on the sales and we'll be thinking the audit procedures more on the sales. Though they will keep coming in. Why? Because these are linked. But I'll focus more on this head trade receivables rather than sales to discuss the audit procedures in relation to this. Okay, that's what we will try to do. Now, in this case, if let's suppose in relation to the sales which have taken place, let's suppose if we take this further, okay, so we have a sale of 450 crore on which balance is rupees 50 crore. Yeah. Now, rupees 450 crore is collected. Now, if let's suppose you are the auditor of this company and you are required to audit the financial statements for 24-25. In this case, there are two situations which are possible. Okay. One, if you look at the balance throughout the year, it keeps changing. Second, if you look at the balance as at the end of the year, you know about it. Okay. It's 50 crore. Now, tell me one thing, that as far as this audit as at the year end is concerned, if let's suppose you are the auditor of the company, will you be focusing only on this closing balance? Or you think that you will also be required to review this balance throughout the year? Yeah, so that's my question to you. What do you think? What will be your audit approach? I'm just hoping you have understood. Huh? So if let's suppose you were the auditor of this company, will you restrict your audit only to this outstanding balance as at the year end? Or you will be looking at the balance or the review of trade receivables throughout the year? What will be your approach on this? Over to you. Rohan says, I'll review the balance throughout the year. Okay. Almaz says throughout the year. Prem says throughout the year. So that means that one point is clear, that even though we are auditing the closing balance, because if you look at the balance sheet, in the balance sheet we have got the closing balance only. But just because the balance sheet shows the closing balance only, can we restrict our audit only to the closing balance? The answer is no, because that may become inappropriate. Why? Because this closing balance is what? It's a built up of opening balance plus the transactions during the year. Yes or no? So if you look at this closing balance of 50 crore, what is that? It's a built up. So at one point you have this opening balance. Okay, whatever was that opening balance. In this opening balance, what do you need to add? Transactions during the year. Yeah. And that is how you get the closing balance. Okay. So opening balance plus transactions will give you the closing balance. So that's the built up. Yeah. I think Krishna has a query. Yes, Krishna. You've raised hand. Yes, Krishna. What is your query? No questions? All right. Now, because it's a built up, so therefore, we can't really say that only 50 crore is what I'll check and nothing beyond that. Okay, now the question arises that if it's a built up, then what do we need to audit? Of course, everything is required to be audited. Opening balance. Can you tell me how will you audit opening balance? Or what is the procedure you will perform for this opening balance? Let's suppose this opening balance was X. So can you tell me for this opening balance of X, what audit procedure you will perform? Very good. Almas says trace the previous audited financial statements. Exactly. Yeah. So this needs to be traced to the previous year's audited financial statements. Simple and easy to understand. Now, next point is around the transactions. So how do you audit transactions? Now, transactions again will comprise of two things. One, there must have been sales during the year. Correct? Second, there must have been receipts during the year. So sales will keep increasing this balance. Receipts will keep reducing this balance. Okay. Now, in relation to these sales, there will be a set of procedures that we are not discussing right now. But in a way, we can say that if the sales are audited, so some part of that audit in a way is being performed for trade receivables also. Because if somebody is auditing the sales, if somebody is auditing the sales transactions, so in a way, we are moving towards the objective of this trade receivables balance also. Yes or no? What do you think? Yes or no? Tell me quickly. Yes or no? Over to you. Yeah? Tanu says yes. Great. Now, for the receipts, what will you do? You'll have to check the collections. So, how do you check the collections? You will verify the ledger. Yeah, so you'll check what all receipts are there in the ledgers, and the same thing you will also trace from the bank statements. Okay, so the same thing will also be traced from the bank statements. Yes or no? Okay, right. Now, in a way, if we do this, or you can say, in a way, if we do this two sets of procedures, so we have reached this closing balance. Yes or no? We have reached this closing balance. But do you think even after we reach this closing balance of 50 crore, which is nothing but a built up of opening balance? So if let's suppose it's a built up of opening balance plus transactions. Opening balance we have tested, transactions we have tested. So after that, do you think there is a need to perform anything else on the closing balance? Tell me, do you think there is anything that needs to be done on the closing balance? Your thoughts, huh? Do you think so? That there will be need to do something more on the closing balance? Tell me quickly, what are your thoughts? Rohan, Prem, Almas, they are saying external confirmations. So, external confirmations, understood? So, you are saying no, there will still be a need for external confirmations. But can you tell me why this external confirmation would still be required? Any thoughts? If you say no external confirmations will be required, can you tell me why? Why do you think it will still be required? So, what is the reason you would want to get into this external confirmation? Quickly, I can see this Samoini saying not required. Uh, After we have done this opening plus transactions, but some of you are saying no, they may be required. Prem is saying because the risk is involved. And what is the risk involved? That the sale transaction may not have actually occurred. Now let's try to understand this. Okay, it's a very big risk. Now what is the risk? Evidence which we have obtained so far, whether we look at the procedures in relation to the opening balance. Okay, so the procedures in respect of the opening balance, if we look at, or the transactions. See, all of these evidences are what? All of these evidences, can you tell me the nature of these Evidences? Priyanshi says because it's not sure that the management is showing true and fair value. It may not have actually occurred. It could be fake. Tanu says for reliance on the transactions. Okay. No, but can you tell me that so far, when it comes to the opening balance, when it comes to the transactions, very good. Prem says all of these evidences that we have discussed in terms of the procedures to be performed so far, they will provide the evidence which is internal. Okay. So all of these will provide the internal evidence. Now, can we say that internal evidence is incorrect or that is something you will not rely on? The answer is no. That is absolutely okay. And as an auditor, we'll also be relying on that. But as we have discussed earlier also, that whenever we are able to obtain any external evidence, okay, whenever we are able to obtain any external evidence, then our reliance will increase. Or you can say such evidence is considered to be more reliable as compared to the internal evidence. Correct? Yeah, so that's considered to be more reliable. Therefore, in this case, as regards the closing balance, what do we need to do? We need to obtain that external evidence. And how do you obtain this external evidence? Tell me, how do you obtain this external evidence? Through direct confirmation. So that means on this closing balance, the procedure that we perform will be what? To obtain external confirmations. Okay, good. Now, can you also help me understand? Of course, Greta, I can see everyone is starting writing down the process of obtaining the external confirmation. I'll come to that anyways, because that is considered to be a very important procedure. For whichever line item you will obtain external confirmation, that is considered to be very important. But can you tell me which assertion will be taken care of if you obtain external confirmation? Over to you. So which assertion you think? Prem says existence. Very good. Existence. Okay, because we are trying to check whether these parties, whether these balances exist or not. Yeah, okay. Varsha is saying occurrence. No, please understand. Occurrence is something you will have in transactions. Means that will be an assertion related to P&L. Currently, we are talking about balance sheet. So in case of balance sheet, we discussed it will be existence. It will be existence. Clear? Yeah? Okay. Now, as regards this procedure of direct confirmations, let's talk about this procedure. Okay. We have discussed this earlier also in case of borrowings, but in case of trade receivables, can you just put down some steps, or maybe in the form of steps, if you can just put down, how will you start this procedure related to direct confirmations? Over to you. Quickly, huh? So, if you can just put down the steps. So, I'm not asking you for one liner that roll out the confirmations. What all steps you'll have? Tell me. In relation to confirmations, can you tell me the steps that you'll have? Okay, Priyanshi is saying auditor is trying his best to get the assurance, but at the end he will be ended up by getting reasonable assurance only, as we learned in chapter 1, which is correct. So I think you are talking about the objective, which is true. Now, can you tell me, for performing this procedure related to direct confirmation, what all steps will be there? So can you put down the steps quickly? We discussed that in the previous session. So what all steps will be there? Can you tell me quickly? Quickly, what steps will be performed by the auditor? What all steps you think will be there? Okay, great. Tanu says selecting the appropriate party to be confirmed. Good. What about others? Okay, so let's put down the steps. Huh? Great. Prem says inspect the trade receivables ledger, send confirmation request based on the materiality. Okay, let's try to understand the steps. Okay, so what will be the first step? First step will be to obtain the listing. Obtain the listing. Okay, so that you can get the population, means how many debtors are there, and make sure the balance, trace the balance of that list to the books of accounts. Okay, so that you have the comfort that the list that you have obtained matches with the books of accounts. Correct? Yeah, so let's suppose you have got a population now. Say in the population there are some 60 debtors. Fine. Now again, depending on the size of the company, the nature of business it may have, the number of debtors could be significant. In some of the cases, it could be 200. In some of the cases, it could be 300. Yeah. Now, from this listing, now what is going to be your second step? See, when it comes to the borrowings, in case of borrowing, you will not select the borrowings. Means which all balances I need to confirm. Why? Because for borrowings, you will send the confirmation for all the borrowings. Because that is quite important in respect of each and every balance which is there. Not only in terms of quantitative nature, but also qualitatively, that is very, very okay. Qualitatively, that is very, very important. Yeah. But when it comes to the debtors, it's not possible to obtain the confirmation from all the debtors to begin with. So that's why you will have to select the debtors for the confirmations to be sent. For the confirmations to be sent. Okay, so your second step will be what? Out of those 60, if let's suppose you are saying that there are total 60 debtors. Now, will you be sending the confirmation to all 60? The answer is no. Now you will select. Now, what will become the basis of your selection? You may want to select, say, top 20 plus some of them on a ad hoc basis. Yeah, or you may want to select top 10, or you may want to cover a certain percentage of the amount. Yeah, so different approaches could be used. So let's suppose out of 60 you have selected 15. Now for these 15, what will you do? Now the same set of activities will be there. For these 15, what are going to be the activities? First, letter needs to be prepared. And where will you get this letter? Management will give you the letter. Will it be sent by the company? No, it's directly sent by the auditor to the debtors. Okay. And generally, when these letters, these confirmation letters are sent out, okay, so generally the debtors are required to confirm the balance. So therefore, in some of the cases, what the debtors will do is the same letter which the auditor has sent, they will sign and stamp that yes, we confirm this. In some of the cases, they will attach their statement that this is our statement. Okay, you can just match that. In some of the cases, they may put remarks that our balance, let's suppose, is Y. Say the auditor is saying X, our balance is Y. Yeah. Priyanshi is saying sampling required. Yes, of course. So this is what we discussed. This is what we discussed. That in your step number 1, you will have this complete population. In your step number 2, you will have a sample. You will have a sampler. Yeah, clear? Now again, sampling criteria will remain the same, which you will use for sampling. Okay. Now, in this case, again, two situations are possible. Response is received or response is not received. Okay, if the response is received, here again two situations are possible. Balance matches, balance doesn't match. Yes or no? Balance matches, balance doesn't match. If the balance matches, it's okay. If the balance doesn't match, then the auditor will request the company to reconcile. Okay, so in this case, this sort of activity related to reconciliation will arise. Tanu is asking about negative, positive. See, please understand that these confirmation requests that we have discussed, whether it was about borrowings or this trade receivable, okay, so these are all positive. Positive means the other party is required to confirm. So we are not saying that the other party needs to remain silent. No. So we want this confirmation from the other party. That's why I'm saying, that's why if you remember in the previous session when we discussed, we talked about the situation of what if no response is received? What will you do? What will you do? Remember? So when you are talking about negative response, so what is negative response? So negative response in a way is negative. I think you're talking about this negative balance confirmation. Yeah. In which case the party will remain silent and will assume that it's correct. No, that's not the case. Okay. Now, what if the response is not received? Here again, two situations are possible. Reminders. Okay. One reminder, two reminder, and three reminders. Generally, up to 2 to 3 reminders are sent. After which we may get on to this situation. Okay. Means the finally the response is received, and there again the balance may or may not match. Okay. The other situation is that despite the reminders, confirmation is not received. Okay. No response. Now in this case, during the course of the reminders which are sent, auditor will request the management, okay, during this process, that you need to reach out to the debtors and ask them to confirm, so that this process gets completed in a faster manner. So this is something which the auditor will request the management to do. Yeah. And management will also request them, but at the same time, please remember that the request will not be that, okay, if you are not sending it to the auditor, so send it to us. No, that's not going to be the request. So the management will request that please respond to the auditor. And in some of the cases, you may find that the responses are coming on email. So even if they are coming on emails to the auditor directly, that is okay. Okay, important thing is to get the response, whether through hard copy or email. Till the time they are direct confirmations, it's considered to be all right. Yeah. So the only concern could be there when there is no response. When there is no response. So what do you do? So any thoughts on this situation? If let's suppose there is no response, let's suppose 15 parties were selected, 5 have not responded. So now what do you do? For these 5 parties from which response is not there, now what do you need to? Over to you. What are your thoughts? So what will you do in respect of these 5 parties from which the response is not there? Dhanush says write off those debtors. Okay, very good. Or sue them. Okay. Rohan says send a team member to their place. Okay, that I think could be in relation to facilitating that. Yeah. Priyanshi says these debtors may not actually exist. See, as regards these debtors, now please understand. Generally, if you look at this activity of confirmations, you will find that 100% confirmations are not received. Okay, practically. Okay, just think about a company. wherein a lot of confirmations are rolled out. In fact, we have looked at a situation wherein the debtors were 60 and 15 were sent. So this number appears to be smaller. But for medium-sized companies, for large-sized companies, yeah, the number of debtors will be quite significant, and therefore the sample selected will also be quite significant, and it's very difficult to obtain the confirmation from all debtors. So in such a situation, when the confirmation is not received from all the debtors, what do you do? Yeah, so how do you go about it? So in such a situation, when the balance confirmation is not received, if let's suppose some of the debtors are still left out, okay, so the company has tried hard, auditor has also tried hard, but the party is not responding. So it's more of an administrative issue, yeah, which is going to arise. So in such a case, what will you do? As an auditor, you will perform alternate audit procedures. Alternate audit procedures. Now, what are going to be the alternate audit procedures? Now, these alternate audit procedures will be the collection, means the subsequent receipt from those debtors. Because if those debtors have paid subsequently, let's suppose on 31st of March, okay, balance for the debtors who have not responded, let's suppose that was rupees 2 crore. Now, let's suppose you plan to perform the audit up to say 15th of May. Let's suppose that's the cutoff. Okay, so up to 15th of May, you will check whether this money has been subsequently received or not. If you find this is received, then it's good. Then it's good, of course. Okay, so the concern around the existence is gone. Yeah. Okay, if let's suppose this is rupees 2 crore, is good. Alongside, what you will also do is you will verify their invoices. Okay, so now what led to the balance transaction? Because of the transaction, there was a balance. Yes or no? So why would there be a balance of debtor? Because there was a sale transaction. And how do you verify a sale transaction? Through the invoices or the agreements? Yeah, so therefore, for these debtors who have not responded, what will you do? You will verify the invoices to verify whether the sale transaction actually occurred or not. And if the sale transaction is verified through the invoice agreement, plus you have also verified the subsequent receipt. Okay, plus you have also verified the subsequent receipt. Then it becomes your alternate audit procedure. Clear on this, everyone? Yeah, clear on this, everyone? So this is how this process of direct confirmation will get completed. Yeah, interesting. I'm just hoping you would have understood the complete perspective. And now you can just think about it, that whether this is a practical or a theory subject. Hoping you have been able to understand. Prem is asking, sir, in real life, positive confirmation request is sent? Yes. So in real scenarios, in practical scenarios, you will always ask the other party to respond. Okay, you'll not say that if you don't respond within 15 days, I'll assume that the balance is there. No, that is not the right approach. Why? Because you want the other party to confirm. Okay, you want the other party to confirm. So that's the thought process. That's what is required to be done. Clear? Priyanshi is asking, sir, it means if the debtor, sorry, So it means if the debtor was consistent in his earlier payment, the risk of bad debts is less and the debtor is liable. Of course, yes. And we'll come to that procedure also. Dhanush is asking, sir, if there is any alternate way and we can do the audit by seeing invoices, then why do we send him regarding the debt? We can directly use that. See, please understand that this procedure is called as alternate. Okay, alternate means if you are not able to do something, then you can try the other procedure. Okay, so this is not your primary procedure. Understood? Primary and secondary. So, what is your primary requirement? To get the external evidence. If by chance, in some of the cases, I'm saying in some of the cases, not in all of the cases, you are not able to get that. That is where you are looking at alternate procedures. But that doesn't mean that secondary procedure will be made primary. Why? Because it appears to be easier to manage. No, that is not the case. Okay, that is not the case. Clear? Clear? Yeah? Dhanush, clear on this? What about others? Okay. Then Samohini is asking, sir, if the response is not received, then we give the reminders? Yes, of course. Okay. And practically, you'll see that responses are not received. Okay. You have to try hard to get the confirmations. Okay. And it's not because that other party is not genuine, debtor doesn't exist. No. It's like they have got their 100 activities to be completed, and this is only an administrative process, that too for a third party. So no party is worried today to give the confirmation, generally. Okay, so that's why it becomes a challenge. Understood? Yeah, so that's why it becomes a challenge. No worries, Dhanush. Yeah, all right. So now moving further, another risk which arises in respect of debtors. In fact, if you want, we can take a break now and then continue, because now we'll also be picking up another important aspects in relation to the debtors. Yeah. Okay. So, which was about the provisions, or you can say the provisions for bad debts, which is again very, very important area as far as debtors are concerned in terms of the evaluation of debtors are concerned. But I think what we can do is we can take a break now. Yeah. But before we take a break, if there is any question, any doubt, over to you. Then we'll take a break. Any question, any doubt if you have, over to you. No? All right. So let's take a break. Yeah. And let's continue after the break. Huh? Sure. Okay, so let's go live here. All right, so let's continue on the procedure. We talked about the debtors. Now, in respect of debtors, another very important area is around the provisionings. Provisioning means if there is a risk in relation to a particular party that the money will not be recovered. Okay, so from the management perspective, what is the accounting requirement? Management needs to create a provision for that. Okay, say there is a debtor balance rupees 50 lakhs and there's a doubt this money will not be collected. Okay, so now maybe full money is not collectible or maybe a proportionate amount is not collectible. So what is going to be the risk? Let's suppose it's around 20 lakhs. So in this case, the provision should be there for 20 lakhs. Yeah, so therefore, in the balance sheet, the net balance should be appearing at 30. Yeah, but there is a concern. There is a risk in the accounting. What is the risk from the auditor's perspective? That the management has not created appropriate provision for this. Yeah, so that's a risk. Now, this is again the responsibility of the auditor to take care of this. So, how will the auditor take care of this? One, of course, will be through balance confirmation. See, if the party confirms the balance, then it means it's good. Okay. So even though it's aged, there could be some reasons, but the money is something you will consider as collectible, because if the other party is confirming, yes, this is something which is due to me and I'll pay, so it's good. But what if there is no balance confirmation, there is no subsequent receipt? In such a case, auditor needs to audit the communications. So management must have had some communications with that party. Okay, those could be verbal, those could be documented. Yeah, so all of those things need to be discussed. Management inquiries will have to be done. Yeah, in a way, auditor needs to understand the assessment of the management, because management must have assessed as to how this is fully recoverable or why no provision has been created on this. Yeah, so that's something which is required to be looked at as far as audit is concerned. Okay, so the audit procedures will definitely be around this area also. Plus, in relation to this provisioning or in relation to some of these situations when the bad debts could be there or a possibility of the bad debt could be there, appropriate disclosure and the presentation requirements are also required to be looked at. Correct? Yeah. Okay. So then I think I see this query from Sunil. So Sunil is asking, sir, what happens if the debtor is good in the books of the client, but bad in the similar client who do same business? Sunil, I am not clear. When you are saying debtor is good in the books of the client, but bad in the similar client, are you saying that for two parties, for one party, a balance is good, for the other party, the balance is not good? Is that the case? Sunil, are you talking about that situation? Yeah, so if I could understand your query correctly, okay, so let me just talk about the situation. Okay, so let's talk about the query of Sunil. So Sunil is asking, let's suppose there's a company, say it's A Limited. So A Limited has a receivable from C Limited, rupees 20 lakhs. Fine. There is another company, B Limited. B Limited has a receivable of rupees 22 lakhs, again from C Limited. So this party, C Limited, is the debtor for two, A Limited and B Limited. For these two parties, we have one debtor. Now, as far as this balance is concerned, for A, it's good, means there is no problem. It appears to be good. Yeah. But for B, it appears this money is not recoverable, so it's bad. Okay, so the question of the Sunil is that what do you do in such a situation? So let's try to understand this situation. I think this is slightly impractical. Okay, why? Because if let's suppose you are auditor of A Limited, say you are auditor of A Limited, then you are reviewing the books of A Limited only, wherein you understand, you assess whether the money from C is collectible or not. And accordingly, you will audit, or you can say accordingly, you will draw your conclusion. Because what will you audit? You will draw your conclusion. Okay. It's not necessary that auditor A will also be the auditor of B, because for B, it could be, let's suppose this is auditor D. Let's suppose over here it is another auditor. Now, if let's suppose for B there is another auditor, how do you know about B? How will you get to know about other companies? Yes, so C may be dealing with hundreds of companies. So how will you go and check each and every company? And you're not supposed to check that. Okay. So that is something which is not really an auditor will go and do. Even if he'll try, how will he do that? Yeah. If let's suppose by chance you are saying that for A and B, for both of them, auditor is common, still it doesn't matter. Why? Because the relationship of C with A and with B could be different. If C is defaulting on the payments of B, does it impact A? No, because if A is getting the payments, there's no problem. Okay, so please try to understand that all of these evaluation need to be transactional. Need to be transactional. Okay, so you need to go on a transaction by transaction basis. You can't say that C is bad for one, so it will become bad for all. Okay, let me take another situation. Let me just stretch this slightly further to help you understand. Let's suppose if we talk about only A and C, say over here it's A and C Limited. In fact, this was B. Yeah, so this was B Limited. When we are saying that 22 lakhs from C is not recoverable, and let's suppose 22 lakhs has a built up of 10 invoices. Okay, it's a built up of 10 invoices. Now, in this case, it may happen that out of 10 invoices, there is a dispute. There is a dispute in respect of one invoice. Yeah, there is a dispute in respect of one invoice. For other 9 invoices, there is no problem. Okay, for other 9 invoices, there is no problem. Yeah, so in this case, again, just because C has defaulted in case of B doesn't mean that B may say that if you are defaulting on one of the invoices, so you will default on all. No, it has to be done on a transaction by transaction basis. If there are 10 transactions wherein dispute is there for only one, so we'll consider the provision for only one. If remaining 9 are good, maybe some of them are paid, already paid, some of them are subsequently paid, and some of them are confirmed by C that yes, he'll pay. Then will you want to create a provision for all of these 9? Tell me, will you want to create a provision for all of these 9, or will that be appropriate to create a provision for all of these 9? Tell me. In fact, Sunil, you can answer this yourself. And everyone else, in this case, will you want the management to create a provision for all the 9 invoices? Tell me quickly. Tanu says no. Yeah. And which is the right approach? Rihanna says no. Which is the right approach? Why? Because for 9 invoices, if there is no dispute, okay, if the collection is assured, okay, so you'll not be worrying about it. You'll not be worrying about it. Clear? Yeah. Sunil says for only one invoice we'll consider. Yes. And that too you will evaluate. And how will you evaluate? Of course, you'll send the balance confirmation. You'll also look at the process which the management is following. Yeah. Of communications, because management must be having an internal process. Remember, for borrowings, we discussed that confirmation process again will be into 2 parts. So for debtors, the same thing will apply. For debtors, management must be having some process internally as well. Yeah, wherein they will check whether this money is reconciled with all of these parties or not, wherein they are obtaining the confirmations from the debtors regularly. It could be a quarterly, or maybe a 6-monthly exercise, or maybe an annual exercise. Yeah. So same way, that internal process must have been there on the part of the management. Okay. Yeah. Everyone clear so far? Any questions, any doubts? Because this is it, I think, which is significant in relation to the audit of trade receivables. I think Samohini is asking about how to prepare this chapter. So let's try to discuss this aspect towards the end, Samohini. Fine. All right. So now what I'll do is I'll just, again the same way, quickly flip through some of the audit procedures. Okay, which you can just read along with the assertions. Yeah, and I would also suggest that once we are through with the session and before we meet next, so every time you should ensure that some of these procedures which are listed down in the study, you go through them. Okay, why? Because that is in a way your revision. At the same time, it is also a sort of practice for you in terms of the language you will want to use, because many a times your concern is you are not able to think through the procedure, so that you need to revise. Some of you have a concern that sir, we are able to think through, but exact language as to what should be there, we are not able to put it down in the right language. Yes or no? Yeah. So some of these are your concerns, and I think to a certain extent, Samohini also seems to be having similar sort of concern. So that's how you are able to take care of this. Fine. Okay. Now let's quickly go through these procedures. For the existence, what will you do? Check whether there are controls. Okay, in respect of recording of a transaction. Ask for period and accounts receivable aging report. Aging, why? Because provisioning, etc. you will want to check. Realization from the debtors, you will check. Direct confirmation procedures, we discussed in quite detail as to, all of these are very, very important. And please remember, whenever you come across such topics in the exam, okay, let's suppose if you are required to write down or if you come across any such item, so these direct confirmation procedures are considered to be the most important procedure. Yeah, so please don't forget that. Okay. Then auditor also needs to perform the procedures around the cutoff, but this is more from the sales side. So when we'll pick up sales, we'll talk about this. Okay. Okay. Which are more on the transactional side. Okay. So that we'll talk about it. Okay. So testing of invoices on a sample basis, matching of invoices to the shipping documents. Okay. All of the supporting documents, all of these on a sample basis, the procedures that you'll do. Yeah. Then the valuation. So the valuation is again the built up of these receivables, which we discussed, opening plus the transactions and the collections. So that's how you'll assess that. Okay, so that again is going to be an important procedure for you. Provisioning, we discussed, that will also have an impact. And once again, a very common procedure. And what is that? That is around the presentation and disclosure requirements. Okay, so now as regards the debtors, the presentation and disclosure requirements one has to take care in accordance with the accounting standards, in accordance with the Schedule 3, yeah, wherein the required disclosures are required to be given. And when it comes to the debtors, the transactions with the related parties, they become all the more important. Okay, so the focus slightly increases when the transactions are taking place with the related party. Okay, yeah. So I would say these are the procedures that we have in respect of debtors. Now, before we move on to the next item, cash and cash equivalent, again, very important area in the financial statements. Let's discuss any questions, any doubts that you may have. Okay, so Priyanka is asking, sir, does the auditor check the reconciliation also, which is prepared by the management? Yes, of course. See, if let's suppose during the year, there's a process of obtaining the reconciliation. So this process needs to be audited. Why? Because the controls are tested. Okay, and how will the management establish controls? By getting into this process. Yeah, by ensuring that there is an implementation of this process. So this needs to be taken care of. Number one. Number two, when it comes to the reconciliation, if let's suppose the balance is not matching, so what are the reconciling items? If let's suppose there is any provisioning requirement, we'll get to know through the reconciliations. If let's suppose there's a dispute on any particular transaction, any particular invoice, that you'll get to know through the reconciliations. Okay, so therefore reconciliations become very important. Yeah, clear? Clear on this? All right, so then I think we can move on to the next item, that is cash and cash equivalents. All right, so Tanu has a query. Tanu is asking, sir, why there is not trade payable? Why there is no trade payable for audit? I couldn't understand what do you mean by why there is no trade payable for audit. Are you saying that the audit for trade payable is not performed? Is that the query? So if that is the query, that's not correct, because audit will be performed for each and every item. Okay, so we'll pick up all of those items. But if you're just trying to relate this to trade receivables, that is incorrect. Okay, so audit will be performed for entire set of financial statements. Trade payable being one of them, that will also be audited. So we are not done with the financial statements. Yeah, so we are going to have multiple sessions because there are so many items in the financial statements. So once we are through, you will get to know about trade payables also. Okay. Okay, so Priyanshi is saying in the first half of this chapter felt boring, but now it has become most important, interesting because it revised. Or yes, of course, Yes, see, when it comes to this particular chapter, so you are absolutely correct that it's sort of a revision of all of those things that you have covered. Why? Because in a way, you are trying to apply all of that knowledge, or you can say all of those procedures when it comes to any particular item in the financial statements. So that's why you're finding this to be a revision, but actually it's an application. And that's where, we have been saying that if you consider the practical aspect, okay, and the more and more you think about it from the practical application of some of these aspects, then automatically you will find there is good interlinkage. Plus, of course, these are quite interesting, no doubt, but it's good you are finding this to be interesting. All right, so now moving to the next item, cash and cash equivalents. Okay, so please remember, there are a lot of items in the financial statements. So don't think that these are the only one. By chance, some of these that we have been picking up, like borrowings, trade receivables, and the one that we are picking up now, these are quite important. Yeah, so if let's suppose you talk about any audit, borrowing will always be an important item. Trade receivables will always be an important item. Cash and cash equivalent will always be an important item. Okay, so all of these will be very, very important. Yeah, okay. Now, cash and cash equivalent. Now, when it comes to the cash and cash equivalent, what do you do? What does it include? Cash in hand, bank balances, fixed deposits. Yes or no? Fixed deposits. Okay. Or if you go apply the requirement of the accounting standard, if you go look at the definition which is there in the accounting standard, if you consider that, okay, so that will give you some insights as to what all cash equivalents could be there. Yeah. So now, yes, of course, Rihanna is talking about marketable secure. See, as I told you, any cash equivalent which is there, but we are not talking about as to what will get covered, what will not get covered. So we are not talking about accounting requirement here. This is only an example. Fine. Now, why is this area important? When it comes to any entity, cash and bank balance is a very risky area. Why? Because there is a risk attached in these balances. Risk in terms of fraud, which could be there. Yes or no? And the procedures which are required to be performed in respect of these balances are therefore quite important, because it's a, again, significant risk area. Okay, so now when it comes to cash in hand, so let's talk about cash in hand. So now what is cash in hand? So we are talking about the hard cash. So every company will have some cash balance. Huh? So some of the companies may have significant balance, some of the companies may have not so significant balance, but every company will have some cash balance. So how do you deal with that as far as its audit is concerned? So one procedure, great. Rohan is saying matching receipts with payments. Yeah, so in a way, we can say that when it comes to the cash in hand, okay, so if we are talking about only the cash, so what will you do? You will review the cash book, you will review the cash book or the cash register. Okay, by different names you can call it cash book, cash register, cash ledger. Okay, which will have both cash inflows, cash outflows. Yeah, so it will have both cash inflows, cash outflows. Yeah, so both these aspects will be there. Correct. Now, when you will review this cash book, so what all assertions you'll try to cover through that? So you'll try to cover the assertion related to the valuation, assertion related to rights and obligations, and because it's an asset, so it's about right. Then of course you will look at its presentation requirements, its disclosure requirements. Yes or no? Then there will also be a procedure related to cutoff, wherein you can just check that whether the transactions have been recorded in the correct period, wherein you can just check last 5 transactions for the reporting year, first 5 transactions for the next financial year. Okay, in the cash book, in the cash ledger. So that will be around cutoff. But another very important procedure which is performed in respect of cash in hand happens to be around its existence. And can you tell me what will that procedure be? As around its existence, what will be the procedure which you will perform? Yes, quickly. As around the existence. Very good. So, Rohan, Prem, they are saying physical verification. Okay. Another very important procedure, physical verification. So this will be performed. Okay, and when is this generally performed? 31st March. Okay, it's not that it will only be performed on 31st March. Before that, after that, at times auditor may also do some sort of surprise check as well. Yeah, and if by chance during the physical verification there are any differences, possible? Answer is yes, difference is possible. Why? Because it may have happened that some of the reimbursements have not been recorded, wherein the cash is getting utilized. Yeah, or maybe there are some slips which are pending to be recorded at the time when the physical verification is being performed. Okay, so of course, reconciliations are possible in relation to the differences. But if at all there is a difference, then the reconciliation will also be required to be audited by the auditor. Clear? Now, as regards cash, generally you will not have significant audit procedures. Yeah, so of course, procedures are largely similar, but some of the important one will be the physical verification. Now, let's talk about bank balances. Okay, whether that is a fixed deposit or current balance or any other bank balance which is there. Now, in this case, what do you think as regards the audit approach? What audit approach you believe, what audit procedure you think need to be performed in respect of bank balances? Rohan is saying bank statement matching. Okay, what about others? In relation to bank balances, what all procedures you will perform? Prem says inspection of bank statement will do. Okay, what about others? What about others? Bank statement matching, inspection of bank statement. Yes. What else? Anything else that comes to your mind? Anything else? In respect of bank balances, huh? See, bank is a very, very critical area. Tanu says verify with the bank manager or bank. So what do you mean by verify? with the bank manager. So do you mean to say that we as an auditor need to go sit with the bank manager? Is it? Sunil says bank reconciliation statements. Very good. So now in relation to banks, bank reconciliation. Okay. This is a very, very important activity. So every company must be having some mechanism of the bank reconciliations. That should be there. Yeah, bank reconciliation as a process should be there with the company. So this mechanism should be there with the company. Yes or no? So now when it comes to the bank reconciliations, so this mechanism, this process which will be there in respect of company. Yeah. So now what will the company do? How will this process be taken care of? This is something which the auditor needs to understand. Means whether the company is doing this or not. And if that is done, so what are the outcome? Auditor needs to find that. Auditor needs to check that. How will the auditor check that? Auditor will go look at those bank reconciliation statements only. Yes or no? So that's how the auditor will verify that. That's how the auditor will verify that. Correct? So therefore, one activity in case of banks, which is very, very important, happens to be the bank reconciliation statement. Now, in a way, if the bank reconciliation statements will be prepared by the management, because who will prepare this? It will be prepared by the management. Yes or no? Auditor will not be preparing that. It will be prepared by the management. Bharat says BRS verification. Yes. Sunil says we can check the bank passbook and company part. Yes, that is what you call as bank reconciliation only. Yes, so for checking the bank reconciliation, you will check the bank balance as per the company's books, bank balance as per the bank book. So both the balances you will check. And in between, if there are differences, the reasons of those differences, that is what you call as reconciliation. Yeah, so that is something you'll check. Okay, so now the point is that if the company is having a bank reconciliations, which is required to be done, then in a way, we can say that company must be obtaining balance confirmations from the banks. Yes or no? In a way, we can say that the company must have been obtaining these balance confirmations from the banks. Yes or no? Company must have been doing this. Because without that, it's not possible. Without that, it's not possible. Yeah. Okay, now the point is that when it comes to the balance reconciliations, wherein the balance confirmations have been obtained and those have been verified by the company which the auditor is also verifying. What do you call this process as? Can you tell me? We have discussed this process earlier also. What do you call this process as? Prem says re-performance of BRS. No, of course, I got it. You are talking about re-performance means in terms of verification by the auditor. But I'm saying, what will you call this process as? This process, Rohan is saying external. No, this is an internal process. See, all of these evidences which you will get are from the company over here. Yes or no? So it's an internal process. It's not an external process. Yeah. And now what you should do is you should try to relate this to borrowings. In case of borrowings, what will you have? You will have balances with the banks. Yes or no? In a way, what you can do is you can just think about all the procedures that you'll have in case of borrowings. Why? Because quite similar to that are the procedures that you will have in respect of banks. See, if you compare bank balance with a balance of borrowing, let's think about it. Let's suppose company has a bank balance rupees 5 crore and company has a borrowing rupees 5 crore. Now both of them are from bank only. In both the cases, who is the party? Banks. What is the only difference? Excuse me. What is the only difference that you have in respect of them? You tell me. What is the difference? Excuse me. What is the difference that you'll have in respect of them? Very good. Prem says asset and liability. Rohan says one is debt, other is not. Means in a way we can say that it's a debit balance. Yes or no? And it's a credit balance. So one is debit balance, one is credit balance. So that's the only difference. Yeah. Otherwise, in a way, we can say it's a balance from the bank. Whether it is due from or due to. Yeah. So that's how you should try to draw correlation between these two items. And why do I say this? Because similar to what you will do in case of borrowings, a very, very important procedure which arises in respect of banks happens to be direct confirmations. Okay, direct confirmations. So that procedure in relation to direct confirmations is a very, very important procedure. Now, can you put down the steps? I think we have discussed this quite a lot. Can you now help me understand and can you now put down the steps which as an auditor you will follow for the direct confirmations in respect of banks? Okay, so I think it's a practice for you. Over to you, quickly. So what are the steps you will follow if, let's suppose, you are the auditor and you are required to audit the bank and you are performing the procedure related to direct confirmations? Quickly, you can say it's a sort of repetition. Yeah, so that's how you should think about it. And that's how you should try to structure the audit procedures. Over to you, quickly. Let me just see who can respond. Okay, Priyanka just mentioned about the recalculation. And see, okay, Priyanka is asking, sir, the auditor checks the reconciliation also, which is, yes, of course. I think we talked about it. Yeah. Okay, great. So I can see this pointers coming from Rihanna. So Rihanna says obtain the bank link, bank list, and trace the balance to the bank account. Very good. So you are taking the listing. Very good. Prem is saying list of bank you obtain, then the letters you will prepare, send those directly to the bank, and those have to be independently received by the auditor. I think he's just tried to summarize some of these points. Very good. Okay, now in this case, if let's suppose Auditor is sending the confirmation. Okay. Now, one question which becomes quite relevant in the context of bank. It's let's suppose the company has got, say, because in case of large companies it's possible. Medium companies again it's possible. Let's suppose company has got 55 bank accounts. Spread across locations. Let's suppose company has got various branches spread across India. In this case, 55 again would be a small number. Some of the cases you may have 100 bank accounts. Some of the cases it may be only 10. Now in this case, tell me one thing. If let's suppose you come across this list of bank accounts, 55. So what will you do? Will you select sample here or not? And why? Will you do a sample? Tell me quickly. So will you be looking at the sample here? Means will you be doing the sampling or not? And why? Tanu says no sampling. Can you tell me why? Everyone, quickly, please confirm. Dhanush says I'll do a sample as the accounts are, means the number of accounts are higher. Rohan says significant amount I'll pick up. Sunil says I'll do the sampling. No, so please understand that when it comes to the banks, similar to the borrowings, you will not do the sampling. Yeah, you need to roll out to all. Yeah, because in case of banks, you can't be selective. It's a very, very significant risk area wherein this procedure is extremely important. Why? To check the existence. Because you want to check the existence. Plus, you also want to check the completeness. Let's understand what is it you are trying to check. Okay, and what are the risks which are possible. Let's suppose there's a company A Limited. It has got a bank account, say in any bank, and in the books you can see there is a balance of only rupees 1000. Okay, so in the books what do you find? Balance is reported as 1000. Now as an auditor you may be thinking this balance is immaterial. Yes or no? As an auditor you may be thinking the balance is immaterial. I think some of you which approach you are considering. But actually, if you look at the balance as per bank, okay, so this balance was as per bank book. But it may happen the balance as per the bank records or the bank statement is rupees 10 lakhs. Possible or not? Tell me. Possible or not? Tell me. Is it possible or not? Yeah. So that's why you will not apply that criteria here. Understood? Understood? Yeah. So therefore you need to roll out to all. And the confirmations again you'll obtain from all. Okay. In this case, generally that approach of alternate testing is avoided generally. So I'm not saying that needs to be ensured for 100%. Of course, auditor will try hard to do that until unless it's a situation wherein it's completely unavoidable, uh, or you believe that it's not possible to get that, and wherein the risk then which is associated by not obtaining the statement or the confirmation from the bank is minuscule. So that again needs to be evaluated by the auditor. Okay. Practically in this case, what happens is reminders are sent to the banks. Okay. Again, it's a challenge to obtain the confirmations from the banks directly. Reminders are sent, and after the reminders, if the confirmations are not obtained, then maybe a person from the company's side and from the audit team will go physically or go to the bank, get the uh, balance confirmation collected. Okay, so that is also practically followed in most of the cases, just to complete this activity. Okay, because in that case it becomes relatively easier to complete that activity. Otherwise you will keep following and the confirmation will not come. Okay, clear? Any questions so far? Any doubts so far? Any questions, any doubts so far? Then what we'll do is we'll look at the audit procedures. Huh? Any questions, any doubts? Over to you quickly. Any questions? No? All right. So now once again what we'll do is, as regards this cash, okay, which is of course about cash and cash equivalent, we'll just try to flip through the audit procedures. Okay, so now in relation to the cash in hand, special care is necessary. Okay, which is about the physical verification. Okay, wherein surprise check would also be there, and sometimes it may not be a surprise, means every 31st March you will do. Yeah, so both the things can be done depending on again the assessment of the auditor. So auditor needs to design that procedure. Okay, the other procedure will be around, of course, the review of the bank statement, the review of the cash register, and picking up transactions on a sample basis in terms of receipts, in terms of payments, underlying documents which are there, requisite approvals which are there for the cash payments, for the cash receipts. Okay, when it comes to the banks, then we discussed another important procedure is about the bank reconciliation statement. And this procedure we are talking about being done by the management, not on the basis of external confirmations, not on the basis of direct confirmations obtained by the auditor, but on the basis of confirmations which are obtained by the management. Of course, when the confirmations are obtained by the auditor, those confirmations will also be matched with the balances of the company. Okay, so there again, if there is any difference over and above which is already existing in the BRS, that will also have to be evaluated. But when it comes to the BRS checking, first of all, it will have to be done on the basis of what the management has prepared. And when the management is preparing, so that will be on the basis of the confirmations which the management is obtaining on its own. After that, what the auditor will obtain, auditor will just go and again cross check whether the balance confirmation of the management and the auditor is same or not. Tanu is asking what is bank reconciliation statement. I think with the full form, I am hoping you would have understood, Tanu, what is a bank reconciliation statement. But by chance, if you are not aware of a bank reconciliation statement, then just to help you understand, you can say it's a reconciliation. Say there is a company B Limited. Okay, in respect of its bank account, which is recorded in the bank book, or you can say the bank ledger. So company must be having a bank ledger. Yes or no? Let's suppose company is showing as at 31st March a balance of 10 lakhs. Fine. Now, when you go and look at the bank statement, okay, now we are not talking about the books of the company, we are talking about the bank statement, or you can say the balance confirmation obtained from the bank. One and the same thing. Let's suppose that shows a balance of rupees 11 lakhs. Now both the statements are obtained on 31st March. Okay, so this was obtained on 31st March. This was also obtained on 31st March. Now ideally both of them should match. But in this case, there is a difference of rupees 1 lakh. Okay. So the statement which is prepared in this case for checking what are the reasons of these rupees 1 lakh. Okay. Now this difference of rupees 1 lakh could be because of one transaction or various transactions. Okay. So one statement is prepared. In that statement, all those adjustments will be shown. Adjustment for differences. What's the reasons? Okay, so that is something which is required to be looked at. Yeah, so this is what you call as bank reconciliation statement. Now, why would there be a difference? Now, a question could be there that why would there be a difference? See, that is possible. Let's suppose a check is issued on 31st of March. If the company issues a check on 31st of March, so company will reduce the bank balance in the books. But the bank has not cleared that on 31st of March because bank will clear this maybe in next 1 day or 2 day. So in the bank statement, the balance will be shown, but from the company's books, it's reduced. So one reason. Okay. Similarly, there could be other reasons. Clear? Tanu, clear on this? Yeah. All right. So then let's come back to those procedures that we were discussing. So I think we talked about BRS. Then, of course, direct confirmation procedure we have discussed quite a lot at various places. And then something which will keep coming up under every head, and that is about presentation and disclosure requirements. And once again, there will be presentation and disclosure requirements. So to take care of this assertion, what do? You look at the requirements of accounting standard as to how this item needs to be presented, where it needs to be presented in the financial statements. You'll look at the schedule 3 as well. Okay. Of course, if there are any disclosures which are attached to that you will take care. Okay. Clear on this? Yeah. Everyone clear? Any questions so far? Any doubts so far? Okay, Priyanka is asking, sir, can we rely on the working of the management? See, when it comes to the working of the management, I think you're talking about BRS, correct? See, when it comes to the working of the management, of course, all of these workings, all of these financial statements are prepared by the management only. Yeah, so you're not relying on that, you're verifying that. That is what an audit is all about. So we are not saying that BRS is there and you take it as it is. You'll check, you'll verify that, you'll examine that. Okay. So you're not relying on anything which is given by the management. You need to perform your procedures. Then I think your other query is around, sir, is it practical to go to the bank for obtain? See, that's a practical insight I've given you. Let's suppose, say the audit is going on. Okay. And you have got next 20 days to complete the audit. Say there are 10 bank accounts. You have sent the confirmation. Now, generally, when you send the confirmation, it will take time to prepare the letter. Then you will send it by post. Even if you send it by courier, it will take 2 days. Okay. Today you prepare, second day you send, third day it will reach the bank. A bank may not want to respond. Bank may be busy in a lot of other activities. Okay. It may have been misplaced by them. That's not an important activity for them anyways. Yeah. But you have a time limit. Why? Because you need to close the financial statements. You need to close the audit as well. So what do? Do you keep waiting? No, you will send the reminder. Let's suppose you wait for 4 to 5 days. You will also want to give a bank some time.
You can't say that today my letter has reached, so next day I'll just keep following. No, you'll wait. You'll 4 to 5 days you'll wait, yeah, for them to respond. If they don't respond, you'll send a reminder. Again, the same process will go on. Yeah, so it will again take, say, another week. By that time your period is over for the audit. So what do you do? For second reminder, for third reminder, if you keep waiting, so the audit will keep getting pushed. Yeah, so that's why there's a practical insight wherein you'll just, instead of then waiting. Why? Because alternate procedures you can perform, but it's a critical area wherein you don't want to just, cut short of this confirmation. Why? Because it's a critical activity. So what do you do? Therefore, you go to the bank. Yeah, you want to expedite this. So this is how you'll expedite this. But idea is it has to be independent. So how will that remain independent? When the audit team member will go there. Okay. So that is again something very, very important on the part of the auditor to keep it independent. That is necessary. Yeah. Because if the independence is somehow not maintained, that the whole purpose, whole objective of this audit procedure goes away. Why? Because otherwise, as regards the confirmations, those are being obtained by the management also. Yes or no? But what is our objective? Our objective is to verify with the third party directly. Okay. Ron is asking, what is earmarked? See, there are certain balances which are earmarked. You can say there are restricted. Means, let's suppose if you have mortgaged something, if let's suppose fixed deposits are mortgaged, so that is what you call as earmarked for that purposes. Yeah, sort of restriction which is placed on that. Yeah, so I think Prem is all clear. Sunil is saying disclose in explanatory notes. What? Of course, the disclosure requirements, whichever are there, you need to ensure that. Of course, you'll do that. I'm not sure as to, for which point you're asking, Sunil, but any disclosure requirement which is relevant for a specified item, you'll have to follow that. Okay? Yeah? Clear? All right. So then I think even though the time is limited, but still we can just start with another area, inventory. Now, inventory, I think it's something which is commonly understood by everyone. Everyone knows about this. Nothing new as far as the understanding of inventory is concerned. Yes or no? It's a very, very common item. Yeah. Now, in relation to inventory, once again, if you look at the audit, you can say there's a cycle, there's a process to which inventory is linked. Every time we have been looking at some areas, we are looking at the process because there's some linkage. For example, in case of receivables, trade receivables, there's a process of sales. You can say in a way it's linked to that. Similarly, if you talk about inventory, so inventory again is linked to the process of procurement. Yes or no? Because inventory will comprise of few items like raw material, work in progress, finished goods, store spares, etc. Correct? Now, in relation to some of these items, what is the first thing you'll need? Raw material. So that means procurement process or the purchases will have to be there for the raw material to be in place. Yeah, so that's how you establish the linkage. Yeah. So therefore,
when it comes to the inventory, of course, inventory doesn't only comprise of raw material, but because even if you talk about work in progress, so what will happen? For work in progress, this raw material will go through a process. So this raw material will go through the process of manufacturing. Yeah, so during the process, when the manufacturing is going on, if you put the raw material over there, it becomes work in progress. Yeah, but once the process is completed, then the raw material gets converted into finished good. Okay, so that is when it gets converted into finished good. Yeah, so this is how this process of manufacturing or this work in progress or finished good, in a way, they involve this raw material. And where do you get this raw material? From the procurement or the purchase process. Yeah, so I'm just hoping you have understood the linkage. Okay, now in this case, once again, if you talk about the linkage, then this process of procurement, or if you talk about these purchases, these are what? It will involve various transactions. Or you can say purchase is all about the P&L item. Yeah, similar to like we had this sales. So in a way, we discussed that when it comes to the trade receivables, okay, so trade receivables will involve sales, which is nothing but the transactions. So here again, our focus is not going to be on these transactions. They will not a doubt be important. They will be relevant for the overall built up of the inventory, whether it is finished good or WIP. No doubt. Yeah, because some sort of valuation gets involved in this entire process. But we are not really trying to focus on purchases when we are discussing the audit of inventory. Okay. Why? Because over here, we are just trying to focus on the balance sheet, which means raw material which is there as at the year end, finished good which is there as at the year end, and of course WIP which is there as at the year end. Okay, though the linkage is there, but I'm just hoping that you have understood that this is what we are really focusing on. This is what we are just really trying to understand over here, and this is how we'll just try to look into some of these processes also, and some of the audit procedures also when it comes to the audit of inventory. Okay, now for the audit of inventory, again, we'll not be able to discuss this entire audit approach, entire audit procedures today, but we can just touch upon some of the important procedures. Now, one of the important procedures in respect of inventory happens to be what? Checking of existence. And we have already discussed this. Yeah, so briefly, we have already discussed this. Please remember, be it any entity, whether it is small, medium, large, existence becomes extremely important in any audit when it comes to the inventory. Okay, so therefore, for this existence, what will be the audit procedure? Rihanna just mentioned physical verification. Yeah, physical verification. So this procedure of physical verification is considered as extremely important procedure. Extremely important procedure. Okay, yeah. So this is something which needs to be focused upon quite a lot. Yeah, and without which audit will not be completed. And when is this performed? Year end. Yeah, so it has to be, of course, 31st March. But again, there are certain things which are required to be looked at. So it can be performed on 30th March, or it can be performed on 1st of April, or maybe the first week of April. Yeah, so these sort of things can also be there. But again, we'll just try to deep dive into this particular activity also when we pick up this in detail. Yeah, but very important procedure as far as inventory is concerned. Okay, so I think we won't be able to again deep dive further into inventory, but I think we have looked at some insights about it, basis which some of the audit procedures, of course, you can also think through. But we are going to continue on this in our next session. Now, before we conclude, if you have any questions, any doubts, I think we can just look at that, huh? So I think any questions, any doubts if you have. All right, so quickly, any questions, any doubts if you have, we can discuss that. Over to you. Anyone, any questions, any doubts? No, I'm just hoping everyone is clear. So, all right. So, with this, we can just conclude our discussion for today. And once again, I'll request just make sure that you revise all of these procedures. Though we had discussed this, but you can just revise that looking at the study material, wherein you can just not only look at the audit procedures but also the language. I think Tanu has this query custodian. See, custodian means if there is something on behalf of another party, that is what you call as custodian. Okay. Anyone else? Any more queries? Okay, so Priyanka is clear. Tanu is clear. I think somebody mentioned I have made notes of all the chapters. Suggest, see, the notes for this chapter, I would say, will be to write down the procedures in a summarized manner, if at all you want to do that. Otherwise, just try to put the pointers in respect of the procedures, uh, or maybe just think through the assertions. Okay. Otherwise, this chapter in itself involves a lot of items in the financial statement, so you'll end up preparing a lot of notes. Okay, so this is how I can just think about it. And of course, Ankita madam is also there, so she can also help you in terms of how to draft the notes, huh?
Thank you, sir. And thank you, students, for your participation. Today, we have continued our chapter number 5, Audit of Items of Financial Statements. So, today we have covered till inventory. So, before coming to the next class, you have to revise the chapter covered till now, as it's a lengthy chapter. If you will leave it and cover it in one go, it will be difficult for you. You can ask your queries regarding the subject now. Okay, if you are having any query how to attempt the paper or any query regarding auditing and ethics, you can ask now. Okay, Sonal is asking, are all chapters important? Can we leave any chapters? No, Sonal, you cannot leave any chapter. Each and every chapter carries some weightage. So all of them are important. Any question from any chapter can be asked. So Jyoti is asking how to revise this chapter number 5. So Jyoti, as discussed earlier also, you can revise it from the Saransh. It's a summary book. Have to refer study material. Saransh is just an overview, just a summary of the chapter, just for the revision purpose. So you're asking for revision, you have to you can refer Saransh, but for detailed study, you have to study it from study material, not just chapter number 5, any chapter. Okay, Rahul is asking how to write answers of this chapter. So Rahul, it depends upon which type of question is being asked. If the question is a case study based question, in that case you have to write the facts of the question, then the provision, then you have to interlink, like as per the standards it's this, but in the question it's given, this is given. Then in the end you have to conclude your answer that as per standards this is the conclusion. But if the question is knowledge based, like if the question is straightforward, for example, you're asking for the chapter number 5, like the examiner is asking write the audit procedure of XY assertion. So you simply have to write the audit procedure of this assertion is as follows, and the length, how many audit procedure you have to write, depend upon the weightage of the question. Okay. Anyone else? So is asking which topic of chapter number 5 is important. All of the topics are important. Any question from any topic can be asked. Jyoti Singh, how to find Saransh? It's available on BOS Knowledge Portal website. For soft copy, you can download it from there. Okay. Anyone else? Anyone else? So, okay, students. The next class is scheduled day after tomorrow on Friday. See you there. Thank you, Achal sir. And thank you,
Thank you.
students.
Thank you.
Thank you.